Welcome to Accessify, the future of trading SAFT NFTs on the decentralized marketplace. So what do you need to know? Currently, institutional investors in early-stage blockchain startups are locked into simple agreements for future tokens, often making the institutions illiquid long after realizing gains, and with the inability to leverage other potential opportunities. What is Accessify's solution? It's a decentralized and permissionless SAFT NFT marketplace for trading future tokens. We see the market valued at over $2 billion on average for SAFT NFT minting. This is based on the 2021 statistics with projected $20 billion institutional investments in the year for over 900 projects. We've spoken to over 15 VCs globally and asked them to go back and speak with their teams that they've invested into, and their willingness to allow the VCs to mint their SAFT agreements and tranche them and sell them on the primary market under the same vesting terms. And it was a resounding yes from all of the projects. So who are we? Accessify is a decentralized market for future tokens powered by NFT. We are creating the innovation and growth of investment strategies in early-stage blockchain companies by allowing institutions to mint their simple agreements for future tokens, known as SAFT NFTs, and trade with retail investors. Our MVP is a decentralized marketplace for creating, managing, and trading SAFT NFTs on the Ethereum network. In 2022, we also aim to add many more multi-chain and layer 2 products step by step. Well, right now, there's limited exit strategies for VCs. While they play a pivotal role in funding for blockchain companies, they are unable to realize the gains at any given time. This often leads to missing out on maximum profit or creates the inability to invest in additional projects and minimizes deal cash flow. And what lies in for the retail investors? Well, they don't have access to these early stage investment projects. They only have the ability to invest during IDO, IEO, or after listing. Yet they do not have the opportunity to purchase the early stage shares prior to listing or at a discount to the listing prices. And what is another main concern? Decentralization. From trusting project token distribution to ensuring the legitimacy of a SAFT agreement to locked binding agreements, centralization lacks transparency and trust, while also not providing a fair opportunity amongst all investors and traders. What are the strengths of Accessify? Accessify is user-friendly and customized. It is completely decentralized. We offer trading incentives for users with strong economic and DAO governance. So our overall solution is a permissionless primary market powered by SAFT NFT look like. Starting on the left-hand side, a user would have future tokens. Through this, they would determine the amount of allocation and the vesting model they would like to mint. Through the minting, they would create an NFT smart contract with verification, which is then turned into a SAFT NFT. Now that you have your SAFT NFT, you're ready to list it on the market, either with a fixed price or an auction model. On the market, you're able to sell the SAFT NFT, and once the user purchases it, they can claim the tokens to gain their future revenues within the marketplace. So what does the workflow look like for token holders? This would be a project team, or maybe it could potentially also be an individual. So what does this mean for the team or token holder? First, they would define the allocations, meaning the amount of tokens that will be put into each NFT smart contract. They would also, at that time, determine the vesting model of when the tokens will be distributed to the NFT smart contract. They will then want to set the vesting model. This will determine when the tokens will be claimable over a period of time. Once the NFT smart contract is determined, the creator will determine how many NFTs they would like to mint, while the tokens will be distributed to those NFTs through the vesting model. The NFTs will then be placed into the marketplace. Here, buyers will be able to enter the marketplace and purchase the NFTs from the creator. Once purchased, they will receive the tokens through the vesting model, where they can claim them at any time. Additionally, if a buyer wishes to exit their position, they can once again list their NFT onto the marketplace where a second buyer has the opportunity to purchase the NFTs and follow the same process. What would it look like for an institution or SAFT holder? Initially, they would want to define the allocation, the token contract address, and the vesting model, which can all be found in the SAFT. This would then determine the NFT smart contract. Here, the creator then, similar to before, will determine the amount of NFTs they would like to mint. Here on the left-hand side, you can see the decentralized verification process. The institution or SAFT holder would upload their document. Additionally, the project team would also upload their SAFT agreement. This creates a high-quality, transparent, and genuine SAFT NFT because it is being verified by not only the institution, but also the project team. Both the institution and the project team would upload their SAFT agreements. This would create matching hashes, as well as a signature by the token creator, the project team. This will create a verification process, ending up with the Accessifi's marketplace specialized. 1, it allows for the detailed info of NFTs. The marketplace shows the detailed info of underlying assets, or in this case, future tokens, including the amount left, claimed, and claimable, as well as the vesting model. Additionally, status of verification is extremely important. Accessify defines different status of verifications representing different levels of risk to prevent loss for buyers. This comes in 2 forms, one as deposited and one as verified. Deposited tokens are controlled by NFT smart contracts. What do we mean by deposited? This means tokens are controlled by NFT smart contracts, which are going to be vested without risk. Verified, on the other hand, are tokens which will be vested as long as transferred into the NFT smart contract. The last is unverified. NFT smart contracts created without tokens or verification, which holds the